guys, so topics for today, we're going to look at, the mentality you need to have when you're placing a trade, or the, the losses, the mentality side of things when it comes to, the losses. We're going to look at contract allocation on various strategies. And, when you're adding more money, what I believe is the best way to go about adding more contracts or on various strategies. We're going to look at when to add more money and contracts, and when I think it's best to do so. We're going to look at taking time off and being consistent when you are trading. And we're going to really sort of dig back in and drill into this mindset thing, because I want to make sure that everyone truly, truly believes in this, because it is a truth. It's a fact. This stuff that I say here in the morning every single day, it's a fact. There's no if, buts, or maybes about it. It is what it is. Mindset side of things. If we look after this, we do this every day, the result will be irrelevant to us. We made 570 today. I couldn't care less. It's great to make money, but it's done with now. 5 minutes later, I've moved on. I'm waiting for the next day. Whatever happened, what's going to happen tomorrow? Okay, so we need to really cover that again. But so a lot of it today is to do with psychology and moving forward with your trading beyond where you are right now. So the first topic is what I want to talk about is the losses mentality. So what I mean by that is when I place a trade, I am completely at ease with taking a loss. I don't want to take a win. I don't want to take a loss, but I'm completely at ease with taking a loss. I don't care. When I place that, when I put the order in the market, I expect to take a loss. That's how I think. I expect to take a loss, and I'm pleasantly surprised if I take a win. Not the other way around. I don't expect to win every time I click the button, and this is a problem most people have. Most people, when they click the button, they want to see a win. They expect to see a win. They want to make sure they're right all the time. It doesn't matter. We're not going to be right very often. Our gold strategy, it's right about 30% of the time. Make a stack of cash with it. We're only right 3 out of 10 times, but who cares? Our crude oil strategy is slightly different. Needs to be right a little bit more than 50% of the time, but that's fine. So when I place a trade, I'm not sitting there going, I hope this is a winner. I really don't want to take a loss. I fully expect to take a loss. I'm completely at ease with my loss. And you know why? Because I know exactly where my stop is. I know where I believe I'm wrong, and I'll get out of the trade. That's why stop losses are invented, so that we are at ease with our worst case scenario. For me, my worst case scenario on a day is 11 ticks or 22, depending on the strategy. But that's my worst case scenario put on a trade by trade basis. I'm completely at ease with that. And everyone else should be too. So when you click that button, you should be completely at ease with taking a loss. You should be expecting a loss, so to speak. And you're not going to be excited if you take a loss, but it's not going to bother you at all. It should just be like, cool, another trade. Where's the next one? Where's my next trade? Where do I go from here? And that's all you're thinking about, just the next trade, because that one's done with. That goes down in the stat sheet, and then we move on. That's done with. We've made this money today. Who cares now? It's done with. Let's see what tomorrow brings. Let's see what next week brings. Doesn't matter what's happened now. It's done with. What's done is done. That all goes down in the stat sheet today, and the next day rolls on, and whatever happens there will go down in the stat sheet as well. But we know that even if we don't make much money, we're not going to lose much. Our strategies are good enough that even if they go through dodgy periods, which they will at some point in time, we're not going to lose too much in the meantime. So why should you have any concern over the loss at all? Right? So that needs to be so ingrained in your heads, this whole concept. And you're not going to place a trade and want to take a loss. It's not like that. You should expect to take a loss. You should expect that if you get to your stop loss, well, guess what? You're going to take a loss. Who cares? Where's the next trade? Where do I go from here? And then you move on. Okay? Does that make sense? Does everyone actually believe that, or is anyone sort of 95% there, or who's where do you think you are in relation to that whole concept? Do you think you're like 70% there? Do you think you're 100% there? Do you think you're sort of borderline just about there? Or do you still have those moments where you take a loss and you're like, ah, crap, I had a loss. Oh, damn. So there's a few people that are sort of 90, 80%. There's a couple that are completely there, that are completely at ease with the whole concept now, which is great. And that's good. So there's a lot of people that are sort of just about there. I reckon give you guys another month. And you'll be well on your way. Okay, well on your way to that mentality. Yeah, and if that's the case, Ken, I would stick to mechanical. I would just stick to the mechanical stuff for the time being. But guys, you got to really, yeah, exactly right, Malcolm. Great point. Consistency equals confidence, and confidence equals this mentality, right? So you have to have confidence in yourself to have this mentality, because if you take a loss, well, you're going backwards, right? But you're going backwards to go forwards. We take 3, 4, 5 little steps backwards, and then we take 10 forward. And I've talked about this 1,000,006 times with the equity curve. An equity curve will look like an uptrending market. And if you can't deal with that little downtrend bit, you can't be a trader. You have to be able to deal with that little downtrend, because that little intraday downtrend is just in the bigger picture. It's pulling back to the trend line. So whenever you're in a losing period, think of it like this: you're in an uptrend. Your trend line, the market, the market has run away upwards really strongly. Where does it come back to? It's going to come back to the trend line, right? So whenever you're taking a losing period, just think to yourself, well, my equity curve is just coming back to the trend line. That's cool. It's what I expect. I expect my equity curve to look like an uptrending market. And at times, I need to pull back to the trend. At times, it's going to run up really aggressively. And guess what? It needs to come back at some point in time to meet the trend line. Right, so if you have that mentality, you should be good to go. But I reckon another month or two, guys, and everyone here will have, the 100% the mentality, because the more you trade, the more consistent you get, the more money you keep adding to your account, the more this stuff is really going to make sense. Next topic is contract allocation on various strategies, and I'll add this into one big topic, and when to add more money, contracts, and da-da-da-da. I'm not a fan of rushing things when it comes to trading. Who's upset with making $1,600 a month? Not many of you, right? Pretty happy with about $1,600, $1,500, $2,000 a month on average if we can pull that out of the market. Let's say around $15,000 to $25,000 per year on a $10,000 account. Is anyone upset with that? Is there any rush to go add more things, to try to make more with the same amount of money when you're probably not going to? So when it comes to adding more money or contracts, get yourself a couple of good months behind you first. There's no rush. You don't have to go trade 6 contracts a day amongst 6 different strategies just because you had one good month. Get yourself 2 or 3 good months. Build the confidence in yourself first. And then once you've got 2 or 3 monthly statements with profit and a consistent result, then start adding more stuff, because I can guarantee you that by adding more stuff, you're not going to do better than me. If we're trading with 10,000, if I'm trading with 10 grand and you're trading with 10 grand and we're trading different strategies because you want to go trade 5 or 6 different strategies and I'm just going to stick to the 2, I will probably still beat you. Because the more you do, it doesn't always equal more profit. The more you do, what tends to happen is you make more mistakes, especially when you're new. You overtrade. There's a greater likelihood that you're going to do something dumb and lose money when you shouldn't. So if you're one of those people that has to do like 5 or 6 things, you got to get over that. Because 1 or 2 trades per day will probably outdo someone that tries to do 5 or 6. And I'm probably here to prove that. Some people might be on slightly more than me that are doing something like that this month. But we'll get to the end of the month and we'll probably be on the same amount of money. And I've done half the work. Right? So think about that. So my guideline is get yourself at least 2 to 3 monthly statements of making money. I don't care if it's $500, $200, $1,000, $2,000, 10 grand. Whatever it is, get yourself a little bit behind you. so that when you do add the next contract, that you're playing with the house's money, so to speak. The only thing you've got to lose is your profits you've already made. That way you're not going to be kicking yourself. If you know, a lot of people, there's some people in here that got to maybe $11,000 in profit and all of a sudden they're trading 6 different strategies. And the result hasn't been any better. About the same as what I've got in here. So it just goes to show, right? So get yourself 2 to 3 strong, good months behind you of consistently trading your plan, doing everything you need to do, taking the trades you need to take, and then look to, if you want to add more money, because by then you've proven to yourself that you're able to make money through trading. And then when you add more money, it's just a matter of changing contracts around. I'll show you that in a sec. And if you're compounding your account, you know, at least make sure you got that, again, that 2 to 3 good months behind you first before you start adding other bits and pieces in. That's the best advice I could give, and I can tell you right now that over trading will kill your account quicker than anything else. Generally, when it comes to trading, the least work you do, the better you will be. Right? I know some traders that trade once or twice per week. Longer term setups, of course. If you're taking short term stuff, well, once or twice a week is just, you know, in my opinion, is just stupid. Why the hell would you spend so much time in front of the computer if you're going to do that? But if you're trading, you know, I know some traders that, you know, for example, Ben, on Traders Audio, he might take 1 or 2 positions a week, but they'll be looking for, you know, a really big trend in either direction. And he would take, you know, he might have a $10,000 loss limit with a $100,000 gain on the ES or one of the equity markets. He only trades the equities. So that is possible, but I can tell you the people that do the least amount of work are the ones that generally have the most amount of money. Go figure. So now let's say that is the case and you've had your good 3 or 4, you know, 2 or 3, 4 profitable months, and now it's time to add more money or add more contracts if you're compounding. When you get to the point of doing that, I think there's some important tips that I can give, and one is don't overload on any one strategy because the results will be so outweighed on that one. It's like, think of it this way. If you have a portfolio of stocks or any investments, let's say properties, I don't care, I'll go stocks because it's easier. Let's say you've got any portfolio of stocks. I'm not going to go get 95% of my portfolio or 75% of my portfolio in financials and then the rest at 25%. So if I'm trading with, let's say I'm trading with 8 contracts, I don't want to go 4 contracts on one strategy and then 2 on the other 2. I don't care how good that 4 one is because the results will be completely outweighed to that one. So in my opinion, the best way to do it is spread it across evenly. But let's say you want to trade 3 strategies and you have, let's say you want to trade 3 strategies, but you have 4 contracts to trade. Then you can go that one on your favorite. So that one extra, go on your favorite one. And then when you add the next one, it goes on the 2 others. And then you're all up to 2 even. And from there, you can either add different strategies, whatever. But in my opinion, it's very important not to be overweight in any one sector as if you're investing. Not to be, it's important not to be over-invested in any one strategy on this because your results will be completely dictated on that strategy. And Andrew has found out that this month. The Diablo has been a little bit poor performer, and he's loading up on that. Trading 1 or 2 contracts on the gold and the crude, but loading up on the Diablo. The Diablo's had a crappy month, so guess where he is? He's having a crappy month. So it's important to evenly spread yourself amongst different strategies. And if you're going to trade 2 strategies only, that's fine. But evenly spread it. Don't go 6 contracts on gold and 2 on crude. Because the results were completely based on gold and nothing to do with crude. You may as well not even trade crude oil. Right? So, but in my opinion, the best way to do it is spread across 3 or 4, 5, 6 strategies. If you can spread yourself across 4, 5, 6 strategies with even contract spread, you're going to have a very smooth equity curve. you should have a very, very consistent, smooth equity curve where most weeks you should be making money, at worst. Julie, I went through that. So Julie just asked, when is the right time to do that? After you've had 3 or 4 profitable months. After you had 3 or 4 profitable months. When you see some monthly statements, it's very easy to get overconfident too quickly with trading. When you see some monthly statements come through, and you got 3 of those in your emails that you printed out, and those 3 show you profit, then I believe you're at the stage where you can start expanding your reach a little bit. But I don't think until you see 3 of those statements on a monthly basis, I don't think you're ready. I think 1 or 2 trades a day, 1 or 2 strategies a day, I think is completely fine for a new trader until they see some consistent profit, then adding that next one, and then adding the next one. You're not consistent if you had 1 profitable month. You're getting there, but you're not consistent yet because you could stuff up really bad this month. So get those good 3 months behind you, get that locked in the bag, get the money in the bank, and then start expanding, adding more money, doing things like that. And then how much to add? Well, if you started with $10,000, don't pump up your account to 100K and then start trading 10 contracts, right? Maybe put in another 10. Slowly. There's no rush. We're going to get there. But go slow. So if you started with 10, maybe add in another 10. Go to 20. And then, again, see that couple of good profitable months, and then maybe add another 10, or maybe add another 20 from that point. And you can slowly work yourself up that way. That's far better than going, boom, chucking in 100, and then trading 10 contracts and then being down $20,000. Okay, so take it slow. There's no rush. You've got a whole 12 months here to get to the end of this year, and I reckon a few of you guys are going to be at the verge of being full-time traders. And it's not going to happen overnight. It's not going to, it's not. There's no rush. We're only 3 months into the year. You got another 9 or whatever it is months to make a lot of money. So don't rush it, right? So hopefully that covers that point. Is there any questions on that? Does that make sense? All right. Any question? I'll just wait a couple of seconds if there's any questions. We'll move on, but if there is, keep typing and I'll get back to it. The other topic I want to cover today is taking time off and being consistent when you are trading, right? And what I mean by that is, as I say to you guys all the time in the room, I think it's so important to take time away from the grind, right? Take time away from the daily grind. Take time away from the stress. We make trading pretty much stress-free, right? Our trading is pretty simple. We try not to stress about it. We just do our thing day in, day out, and the result will tell for itself. But it's still taxing on the mind and on your eyes, and constantly looking at screens and being in the middle of the night for a lot of you guys in Australia. It's taxing. It's a taxing career. You go old very early in this career. You get grey hair. I've got grey hair. I'm damn 30 years old, right? I don't have grey hair like my pop, but I got grey hair, and it's freaking annoying, right? But so when you can take time off, like from tomorrow onwards, in these weeks and around public holidays. Around public holidays, we always take the Friday off. If it's a Monday public holiday, we'll take the Friday and the Monday off. We'll enjoy that extra day, give ourselves 4 days away from the markets, and then come back in Tuesday fresh and ready to hit them for another big consistent run. So my thing is, every single day I can be here that makes sense for me to trade, I will trade. I don't care if I got a broken arm. If I'm in hospital, I'll take my freaking laptop. I don't care, right? Even though I don't like laptops, I throw it out the window. But anyway, that's another story. But what I'm saying is, every single day I'm meant to trade, I will trade. No doubt about it. Maybe on the occasion if a family member was sick or something, but but I'll still try to trade, right? Because that's what I'm meant to do. I need to be extremely consistent, because I know if I'm consistent with my trading, I know if that's the case, that the results will be very clear, and my testing results will make perfect sense in the future as well. If I'm inconsistent, if I'm here 3 days a week, well, I could lose the 2 best trades of the week if I'm consistently not here 2 days a week. I could be missing out on the best possible trades. And Andy, I know, Andy, you got a job and stuff like that. But Andy's a good example of this month. Andy's missed basically the 3 best days of the month because he's been away and that sort of stuff. Not by his choice, but he just couldn't trade. Now, if it was his choice that he didn't trade because he was out partying with a mate, or or just watching TV because he couldn't be bothered, that'll be a completely different story. And that's what I'm getting at here. If you can trade, you damn well trade, and you make sure you're there to trade, because it's very important. Because it's very important to be consistent with your trading, because that will lead to consistent results. If you consistently lose out on 2 days a week, well, it's probably pretty likely that the way the trading gods work, they try to screw you over. And I can pretty much guarantee that the 2 days you miss, they're not going to be the losing days. They're going to be the best winning days. Yeah, exactly right. You're still in profit, Andy, so that's the point. But what I'm getting at is it's important to be here when you need to be trading. But when you take time off, get away. Don't turn your damn computer on. Don't turn the charts on. Don't worry about what would have happened if you were here trading. From tomorrow onwards, I will not turn this computer on until Monday next week. When I turn this computer off today, that's it. It stays off until Monday. I couldn't care less what happens tomorrow, the next day. It will stay off because I'm taking time off. It's my time to get away from the markets. I don't even think about it. I don't turn on CNBC. I don't turn on Bloomberg. I don't even look at CNN. If they start pulling on the results for what the S&P did, I turn it off. I just don't want to have anything to do with the market when I'm taking my time off. So I think it's very important to do that as well. That's something I had to learn, because trading is an addictive sort of career, hobby, whatever you want to call it, depending on what stage you are. If it's a career for you, and if you're at that point where it is a career, it's very addictive. It's not like a normal job, right, where the best time of the day is when you go home. With trading, the best time of the day is all damn day. I love being in front of the markets. For me, it's very hard to take time off because I just love being here. I love what I do. I wouldn't do it if I didn't love it, but I love what I do, and the great thing is I can make money off it, and it can be a career for me. That's great. If you love what you do and you can make money off it, well, that's perfect in a lot of people's eyes. A lot of people out there work a job they hate. They don't like their boss. They have to travel to work and commute in the traffic. Takes an hour to get. In Melbourne, it used to take me an hour to get to damn work, and I nearly throw a rock. But now I don't have to do any of that stuff, and it is an addictive sort of thing to be involved in. So you've got to get yourself away from it. Take time off, enjoy your time off, and freshen up. Because when you come back on the Monday next week, you'll be fresh. You'll be looking for new ideas. You'll have a new lease on life, right? It's so true. I take 3 days away from the markets, and I'm like a new person. I'm out there hunting for new strategies and trying to do better and all that stuff. Right now, I couldn't be bothered. I'm just happy trading at the moment. But I'm at the stage where I'm like, I need some time off. All right, so that, in my opinion, it's very important, and you need to follow my advice because you'll be a better trader for it. Okay, does that make sense, guys? Just if there's any questions on that, let me know. Just give me about 30 seconds. All right. So what I want to do now is just go over, really dig in deep to this. Yeah, exactly, Julie. What I want to do now is really just dig into this mindset thing and just break it down into little individual pieces, and just so we all really truly believe it. And I want you guys to, if you have to, put this stuff on your bedroom wall, put it on your back door of your dunny, whatever. Andy, you might not know what a dunny is. It's a toilet. But let's break this down. So today is a new day. Yesterday, last week, or month do not matter. So whenever you turn on the computer in the morning, every time you flick that button, that's a new day. When you, if you need to, have like a trigger that as soon as you turn that computer button on, whatever happened in the past doesn't matter. That's your point to be in the moment, be in today only. And we're not going to worry about where we are in the month, the week, wherever. Doesn't matter. Whenever we turn that computer on, whenever we come here to do our job each day, it's a new day. It's a fresh start. We can do whatever we got to do today, and the result will not make a difference to our life. And that's what we need to do. So we need to make sure that when we turn the computer on each day, that it's a fresh start. It's a new day. We forget about the week. We forget about the month. We forget about what happened yesterday. We forget about what you might think is going to happen in the next month. Doesn't matter. It's today that we've got to focus on. That's the only point of our focus for the day. We're not going to let any one trade, day, week, or month cause us pain in any way. And how do we do that? Well, we make sure we've got proper risk management procedures. We need to make sure that when we take a trade, that trade is not going to be such larger risk that it's going to make you feel pain in any way. The same on the day. If you can't handle the full stop out for the day, which is $440 at the moment, which we have not had one yet at all, if you can't handle to take that loss at some point in time, because it will happen, you need to rethink your risk management strategy. Now, on a weekly basis, if you can't have $1,000, $1,500 drawdown a week, which will happen at some point in time, we'll get 3 or 4 days in a row wrong. It will happen, I guarantee it. If you can't handle that, you need to rethink your weekly risk management procedure. And then again, on the monthly basis, you need to look at your daily risk, your per trade risk, your weekly risk, and your monthly risk, and they should never cause you pain. If you take a loss and you think, oh my God, I'm $440 down for the day, if that's how you're going to feel, you need to change your strategy. You need to change your risk management strategy. And that could be changing your setup. It could be adding more money. It could be doing all sorts of different stuff. At the end of the day, we need to let the strategies work, and their result will be determined on how the strategy is and what it is you're trading. And if you can't handle that, the likely outcome of any one day, or the possible outcome of any one day, week, month, or year, whatever it may be, you need to change it. So we're going to keep our risk low so that in the event of a losing period or periods, we will not be any significant drawdown. So by the way we do things, with our risk levels where they are and our profit targets and everything, the worst drawdown we've been in is about $500-600. Trading just a gold and crude over 30-something days, around 30 days. What is it, 29, 30 days we've traded? And the worst we've been down is $500, $600, $700, somewhere around there. It's pretty good. So the reason we don't have much drawdown is because we keep our risk low. We don't let any trade get away from us. We don't move our stops out because we think we're going to. The stops are static. The stops stay where they are. Right? Now, if there's a difference between one tick somewhere, well, that's different. But you're not going to go move your stop because you think it's going to come back. You keep your stop where it is. Our stop loss tells us we're wrong, and that's perfectly fine. We're allowed to be wrong. We're actually going to be wrong more often than we're right. Right? The next point. The result of any one of our trades today means nothing in a long-term picture of my trading career. This goes back to what we were saying before. Whenever we place a trade, I expect to be wrong. If I'm right, I'm happy. It's a great surprise. But I know that today's trades means nothing. I couldn't care less. We made money today. Great. Move on. If we lost money today, who cares? Move on. Doesn't matter. It's not going to make a difference. The result of today's trades or any one trade individually makes no difference. If I asked you, here's a question. What happened 7 days ago? What was the trade result 7 days ago? Without looking, do you remember? Do you care? Does it make a difference? Certainly not. I don't know what happened 7 days ago. I couldn't give a rat's butt. So why would I worry about it now if I'm not even going to remember in 5 days' time what happened? So today means nothing. Today is just another blip on the daily chart. Means nothing to us. Because I can guarantee in 7 days' time, if I ask you the same question, what happened today? You wouldn't have a damn clue. Because you don't care. And that's how it should be. Executing my plan correctly is my job today. It's my only job. That's so important. There's only one thing you can do. You can take your trades according to your plan. That's the only thing you can do. So the only way you can make money from trading, I can guarantee it, the only way you can make money from trading is to have a good plan and to follow it. To take the trades you're meant to be taking each day, to do what you're meant to do each day, and make sure you have your risk management procedures and make sure you follow them day in, day out. We have no control over the result of any trade we take. There is nothing we can do. When we click that damn button to get into the market, there is not one thing we can do that can make a difference to a result. If it's going to go backwards and hit our stop, there's nothing you can do. It's just going to hit our stop. If it's going to go to target, great. There's nothing you can do. It's a 50. As soon as you click that button, it doesn't matter about any test results or anything. It's a 50-50 chance of going up or down. How far up or down? Well, that's based on testing, right? But there's a 50% chance it could go up or a 50% chance it can go down. There is nothing else that you can do about influencing those odds when you're in the trade. Once the trade's on, it's at the perils of the market. Whatever it wants to do. Now, obviously, we can manage it slightly, but we can't make the market go up or down. It's just going to go whichever way it wants to, and then we manage it according. But we can't control the trade. We can't control anything about it. Once we enter that trade, it is what it is. And likewise for the whole day. The only thing we can control is how much we're going to lose and how much we could potentially make based on our trading plan. It's the only thing we can control. We can't control anything in between. Whatever happens, happens. So there's no point even worrying about it. And that is our biggest focus of the day. And again, to finish it all up, we go back into risk because that's what we do. As I've said before, if you were to tell someone what you do, instead of saying a trader, just so you really knock this into your head, instead of saying a trader, say I'm a professional risk management. I'm a professional money manager. I'm a professional risk management expert. Whatever the hell you want to say, but ingrain it in your head. You're not a trader. All you do is you manage risk. You're a risk manager. Yeah, we take trades, but the only thing we have control over is the downside. How much we can potentially lose from the trade. And if we look after that, I'm pretty certain we'll make money. It's been working for me for many, many years. And the only people that don't make money in trading are people that don't follow these guidelines. That's a fact. If you don't follow any of these guidelines and you let a trade or a day or a week or anything like that cause you pain, well, guess what? That's when you go do dumb stuff. That's when you go blow accounts. If you don't keep your risk low, that's when you start getting all these psychological problems. If you worry about what happened yesterday or last week or last month or last year, a lot of you guys who got trading baggage, I bet you a lot of that's gone now. If you worry about that stuff, well, you're not going to perform properly today. If you think that today's trade is very important, if you think that this trade you've just entered is so important to your life, well, if you lose, you're probably going to do dumb stuff. If you don't follow your plan, you're going to lose. If you think you have control over the trade, you're going to lose because you're going to do dumb stuff. You're going to move out your stop. You're going to do all these sorts of crazy things. So this is a fact. If you don't follow these guidelines, there is a very, very high likelihood you will not make money through trading. But if you follow these guidelines and you truly believe what is written down here, and I think you guys are about 90% there, 95% there, most of you. if you truly believe this and you need to like recite this. It should be so ingrained in your head.